Assalamualaikum and a very good morning. My name is Erlane. So today we're going to go to part 2 of MFRS 116. Alright, now this is related to property, plant and equipment. From where we have stopped in our last session, we have actually covered the definition, the recognition, the measurement in terms of initial measurement as well as subsequent measurement. Alright, so we're going to cover today is depreciation, that is related to MFRS 116. So what does it mean by depreciation? Right? Depreciation is the system allocation of the depreciable amount of an asset over its useful life. Now, why do we need to have depreciation? Alright, now this is following the matching concept. So what does it mean by matching concept? That is, we charge the amount incurred for that particular period with the income earned for that particular period. Okay, so if let's say for example we have a motor vehicle valued at 10,000 and we know that the motor vehicle useful life is 5 years, meaning that for every year we are going to take a part of the amount of the motor vehicle, which is 2,000, and charge it to the income statement. Okay, so this is consistent with the revenue that we earn when using that particular asset for that particular period. Alright, so the amount of depreciation charge will be charged to income statement starting from when the asset is available for use. Okay, so now how do we determine the depreciable amount? The first thing that we need to know when we want to determine the depreciable amount is whether the motor vehicle or the asset has a scrap value. So what does it mean by scrap value? Alright, the scrap value is the amount that we are going to obtain upon completing of the useful life. In other words, that if let's say that after using that particular asset, we decided not to sell it off at the end of its useful life, how much amount of money that we are going to get. Alright, so scrap value, another term for scrap value is residual value, as well as another name for scrap value is residual value. Alright, so once we have identified the amount of scrap value or residual value, then we have to determine the amount of useful life. Alright, certain asset can be used for 5 years. Certain other asset can be used for 10 years. So it is the number of years or the number of useful life is normally determined by the company's practices. Alright, so for example, motor vehicle is often depreciable over 5 years. Alright, so land properties, for example, building, it can be 15 years or 20 years or 25 years. So what actually determine our useful life? Alright, so if you could look at the mind map, okay, so what determine our useful life? One is the expected usage. Alright, so if for a vehicle, normally the useful life we can use for 5 years. So it is based on the expected usage. How long are we going to use that particular asset? So it is common that the expected usage of a particular asset is determined by the company's past experience. Alright, so another way on determining the useful life is the expected physical wear and tear. Alright, now it is understandable that asset or non-current asset have physical wear and tear. Alright, after using a particular asset, the physical life of the asset can be reduced due to the everyday usage of that particular asset. Now, another reason on determining our useful life is the technical or commercial obsolescence. Alright, technical or commercial obsolescence normally applies to non-current assets such as computers. Alright, because computers, it evolves very fast, and because of that, the parts can be easily outdated. Okay, another way on determining our useful life is we look at the legal or similar limits. Okay, so next is the methods of depreciation. Alright, now to determine the depreciation, there are few methods that we need to know. Alright, the first method is the straight line method. Right? Straight line method means that we are going to depreciate the amount of depreciate the non-current asset based on equal amount of the depreciation. Let's say, for example, if let's say you have a motor vehicle of 5,000 ringgit, and you know that this motor vehicle can be used for 5 years. Now to calculate your depreciation based on the straight line method, your depreciation amount that should be charged to the income statement would be 5,000 divided by 5 years. So your depreciation charge is 1,000 per year for 5 years. Right? So this is how you determine your depreciation. If you use the straight line method, that is the amount that you should charge would be 1,000 per year for 5 years, starting from the beginning of the use of the particular asset. Okay. Now the second methods that we can use to record or to determine our depreciation amount is using the reducing balance method. Reducing balance method is based on the book value of the particular asset. In other words, that the amount of depreciation charge to the on the motor vehicle would reduce over time. Alright, let me show you one example. If again, following the previous example, if the motor vehicle is 5,000 and the useful life is 5 years, and if you want to determine based on reducing balance method, then first what you need to do is to determine the percentage of the useful life in terms of percentage, to determine the percentage of the depreciation. So if let's say useful life is 5 years, 5 years, this is equivalent to 20% per year. So when you want to determine your depreciation amount for the first year, what you need to do is to take the amount, the cost amount 5,000 times 20% that is chargeable for the depreciation for first year. Then the amount of depreciation for the first year is 1,000. Then when you go to second year, to determine the amount of depreciation, you take the cost minus the total depreciation that you have already charged for that particular asset, which is 1,000. So your carrying value becomes 4,000. Then to determine the depreciation charge for that particular year times 20%, so you have 800. Then next, to determine the depreciation for the third year, 5,000 minus the total depreciation that you have already charged, which is 1,800. So you have carrying value of 3,200. And to determine the depreciation charge for that particular period times 20%, so you have 640. And you keep on depreciating using this way, this method, until your total depreciation is equal to 0. So once it has reached 0, meaning that your amount, your non-current asset, or based on this example, your motor vehicle has been fully depreciated, right? Now let's say that if your motor vehicle have a scrap value of 300 ringgit. So to determine, and let's say that if you use straight line method, To determine your depreciation for first year, would be 5,000 minus your scrap value 300 becomes 4,700, then times 20%. Why I use 20% is because useful life of 5 years is equivalent to 20%. So if let's say that a non-current asset has a useful life of 10 years, then it would be 10%. So you need to know 5 years is equivalent to how many percent. So following this, if your scrap value is 300, to determine your depreciation for the first year, 5,000 minus 300 equals to 4,700. So times 20%, so the total depreciation charge for that particular period is 540. Okay, so you continue depreciating this amount until the total depreciation is equal to the amount of the non-current asset. So once that happens, meaning that your asset has been fully depreciated. Okay. The next method that you need to know under this cost is the sum of digit method. Alright. Now the sum of digit method is when you use amount of they will give you a number of years. So let's say that you have 5 years. So 1 plus 2 plus 1 plus 2 plus 3 plus 4 plus 5. So how to determine whether how to determine the depreciation amount for this motor vehicle if you are using the sum of digit method? So what you need to do is first accumulate all the numbers and you'll get 15. Okay, and to determine the first year, because you have the first year depreciation, so you'll take 1 over 15 times the value of the asset, 5,000. So you'll get, for that particular period, your depreciation charge is 333 ringgit and 33 cents. So if you go to the second year, depreciation will be 2 over 15 times the cost of the asset, that is 5,000. So you have 600. For the second year, your depreciation charge is 667. Alright, so this is how you're going to calculate, your depreciation amount if you're using the sum of digit method. Okay. Now, when should we use straight line method or reducing balance method or sum of digit method? So this one depending on the policy of the companies. So normally they determine the method that they use based on their past experience. And this method should reflect the pattern of economic consumption. Okay. Now, of course, we need to revalue the useful life of the asset annually. Okay. Now, that's it about depreciation. Now we go to the next one, which is impairment loss. Because to determine the carrying value of non-current asset, we normally take the historical cost, that is the cost that we use to purchase the cost of purchasing the non-current asset, minus the total amount of depreciation that we have already charged, minus the total impairment loss. But what does it mean by impairment loss? Now, impairment loss is when the recoverable amount is lower than the carrying value. Right? So, recoverable amount is the higher of net realizable value or value in use. Alright? Now, however, impairment loss will be covered under MFRS 136 Okay, in order to get some understanding on what does it mean by impairment loss, we will look at tutorial number 7. Okay, so following this example, a factory building was purchased on 31st March 1999 for 2.6 million and is depreciated on a straight line method over a useful life of 30 years. The estimated residual value of the factory building is 10% on cost. So in February 2009, an explosion occurred in the west wing of the factory, which was the holding area of some flammable materials. The factory was partly damaged by the explosion. The company which runs the factory experienced significant loss and decided to test for impairment on the factory building. The estimated fair value as at 31st March 2009 is 1 million, less cost to sell 350 million of the factory building was 650,000 and the value in use on that date was 1.5 million. Recall that when we refer to our notes, to determine the recoverable amount is the higher of not realizable value or value in use. So we need to compare these two values and take the value which is higher. Okay, so coming back to the tutorial question, they ask us whether there is an impairment loss on the factory building. So you have to determine the difference between recoverable amount and the carrying value and see whichever is lower, right? You can see that if the recoverable amount is lower than the carrying value, then there is an impairment loss. Okay, so to determine whether there is an impairment loss or not, so we look at the cost of factory building, which we spent 2.6 million. Okay, less depreciable amount. Now, depreciable amount is 2.6 million over a useful life of 30 years. So this is using this question request us to determine the depreciation amount based on the straight line method. Alright, so cost of building 2.6 million, residual amount is 10% on cost. Okay, so meaning that 2.4 million. Right, so the depreciation is over 30 years. So you get 778,000. Now, how do we get this 78,000? Is actually because we know that the useful life of the factory building is 30 years. So 2.34 million divided by 30 years, you get an annual depreciation of 78,000. And because this asset has been with us for 10 years, so we have depreciated, the total amount of depreciation over 10 years is 780,000. Right? So the impairment loss, the carrying amount of the factory building is 1.82 million. Okay. Now we need to determine the carrying value of the factory building with the recoverable amount. Now to determine the recoverable amount, we take whichever is higher between non-realizable value and value in use. So they have informed us that the net realizable value is 650,000 and the value in use is 1.5 million. So we have to take 1.5 million and compare with our carrying value. We find that there is an impairment loss because the recoverable amount is lower than the carrying amount. Right? So that leads to an impairment loss of 320,000. Okay. Now they also ask us if your answer to A, whether our answer to A will change if the fair value of the building was 2.25 million. Alright, so your answer would be, if let's say the fair value of the building is 2.25 million, so your recoverable amount would be higher than your carrying amount. In that case, the carrying amount of the building factory is 1.82 million. Recoverable amount is fair value 2.2 million. Less cost to sell 350,000. So you have 1.9 million. So in this case, like I mentioned just now, the recoverable amount is higher than your carrying amount. So there is no impairment loss. Okay. So I hope you understand, by referring to the tutorial, I hope you understand what does it mean by impairment loss. So let me just mention it once again, that impairment loss occurs when the recoverable amount is lower than the carrying value. Okay. So to determine the recoverable amount, we look at whichever is higher between the net realizable value and value in use. Okay. Next, we look at what happens if there is a derecognition. Now, what does it mean by derecognition? Okay, derecognition means that when we decided to dispose, right, or leave out the non-current asset from our books of accounts. So if, let's say, we decided we don't want to use that particular non-current asset and we want to sell it off, we want to dispose it, then that is known as derecognition. So it can be either we retire the asset or we dispose the asset. So when it comes to derecognition, what we need to do is we have to compare the selling price of disposing that particular asset with the carrying amount or net book value. If let's say that if you have your selling price is more than your net book value, then you will get a gain. So when there's a gain, you charge it to the income statement on the revenue part, because you are gaining money from, or you are gaining from the sale of that particular asset. However, if your selling price is lower than the net book value, then there will be a loss. So in this case, this is considered as an expense. So we'll charge that also to the to the income statement. Okay. Now, subsequent expenditure. Okay. So let's say you have a non-current asset. Let's say, for example, you have a motor vehicle. Okay. Now, you may over time have incur some expenditure on that motor vehicle. Okay. So let's take for example, when you have that motor vehicle, you decided to install sport rims on the motor vehicle. Right. So incurring that sport rims actually increase the value of the motor vehicle. So if it increase the value of the motor vehicle, it actually meet the recognition criteria, right? Because we improve the asset. So in this case, we have to capitalize the amount of the value of the sport rims to the motor vehicle account. Okay. So this, another term for this is known as capital expenditure. Okay. You may also incur expenses such as cleaning or maintaining that motor vehicle. So in this case, it doesn't improve the value of the asset because it's considered a day-to-day activities where you have to clean the motor vehicle. Now in this case, we will write off as an expense. Now another term for this is known as revenue expenditure. Okay. Now expenses incurred in replacing or renewing a component of an item of PPE, we will recognize at the carrying amount of the new item, meaning that we are going to incur and capitalize it because it is capital nature. Alright. However, if the carrying amount of the replaced component must be derecognized. Alright, let's follow the earlier example of motor vehicle. So let's say that in that motor vehicle, you have air condition installed, right? and after some time of using that air condition, you find that the air condition is no longer working, and repairing it doesn't work, so you decided to replace it. Now when you replace it, you have to take out the existing air condition to replace with the new air condition. Alright, now the value of the old air condition have to be derecognized, meaning that it has the amount, that particular amount has to be taken out from the motor vehicle account and replace it with the new value of the new component. Right? So let's look at tutorial number 8 to further understanding of this topic. Okay. Uphill Berhad acquired one of its machine on 1st January 2008. The machine is used to manufacture gymnasium and fitness equipment with useful life of 5 years. The details of the machine are as follows, right? So they've given us the invoice price, the delivery cost, import duties and taxes, insurance on shipment, general administrative costs, installation charges, estimated dismantling costs, right? Now, what we have learned in the first part of MFRS 116 is to determine the value or the total cost of the non-current asset. Okay, so you should know by now that to determine the cost of the non-current asset, if it's a purchase item, meaning that what we're going to include is the cost of that particular non-current asset plus any cost related to the purchase of that particular asset, right? For example, income taxes, duties, right, delivery costs, all those costs need to be included as part of the cost of the non-current asset. Okay, on 1st January 2010, Uphill Berhad upgraded the machine by adding a new component at a cost of 6880. This component reduced the production time and the useful life of the machine was extended to another 5 years. The machine was sold on 1st January 2014 for 15,000. So explain which of the costs incurred may be part of the initial cost on 1st January 2008. Right? So we need to identify from all these costs which costs should be included in the cost of the machine. So the initial cost of the machinery on 1st January 2008 will consist of the purchase price, any directly attributable costs incurred in bringing the asset into working condition, and intended use and location, initial estimate of the cost of dismantling and removing the asset and restoring the site on which it is located. Alright, so to determine the initial cost, include the invoice price of the machinery, plus the delivery cost, plus import duties and taxes, plus insurance on shipment, installation charges, and dismantling costs, bringing it to the present value. Right, so the initial cost is 105,200. Okay. Then the second part of the question requires us to prepare a schedule to show the movement of the machine for the year ended 31st December 2010. Right, so to show the movement at cost as at 1st January 2010, the total cost is 105,200. Then we did some upgrading, so the cost is 6880. So the value of your machinery as at 31st December 2010 is 112,080. Okay. Then to determine the accumulated depreciation as at 1st January 2010 is 42080. So how do we get this 42080? We look at the workings here. Our accounting period ends at 31st December 2000. Ends at 31st December. Alright, so we purchased the asset on 1st January 2008. So we need to determine the total depreciation charge to this asset until 1st January 2010. That is the beginning of the current accounting period. So 105,200 divided by 5 years times 2 years, that is from 1st January 2008 to 31st December 2008, 1 year, and then 1st January 2009 up to 31st December 2009, another year. So altogether 2 years. So times 2 years, so you have 42080. This leads to your carrying amount of this particular asset, 105,200 minus 42080, then you get 63120. Now to determine the depreciation charge for 2010, that is from the period 1st January 2010 up to 31st December 2010. So 105,200 minus the total depreciation that you have already charged is 63120 divided by 5 years. So you have depreciation 12,624 plus the upgrading cost 6880 divided by 5, 1376. So your total depreciation charge for 2010 is 14,000, right? Whereas your cost is 70,000. So the total depreciation, the carrying amount of this asset as at 31st December 2010 is 56,000. Okay. Next, the question also asks us to determine the journal entries to record the derecognition of the machine on 1st January 2014. That is, we have to take out the machinery as at 31st December 2014. So what we need to do is to prepare the journal entry. Now, the value of the machinery is 112,080, right? So how do we get 112,080? That is the value of the machinery as at 31st December 2010. Okay, so machinery is a non-current asset which normally has a balance of a debit, which normally has a debit balance. But when we want to derecognize it, meaning that we have to take out the machinery out of the account, so we credit the account, right? Now when we derecognize it, if refer to the question, they sold it off for 15,000. So when we sold the machine for 15,000, so we will debit bank and credit machinery. That's why we debit bank. Now the next thing is we have to determine the total amount of depreciation that we also need to derecognize. Right? To determine the total amount of depreciation, so we continue from our earlier calculation. That is the total depreciation as at 31st December 2010 is 56080. That is total amount of depreciation that is from working shown in here. Okay, so you have 56080. Okay. Then the amount charged for the year 2011, 12 and 13, 14,000 respectively, which makes a total depreciation charge on this particular asset is 98080. Okay. So accumulated depreciation is a contra account to non-current asset. So when we want to derecognize it, we have to debit it, right? So leaving a balance of 1,000. This is loss on disposal of PPE, so should be charged to the statement of profit and loss account. Okay. Right. So to further enhance our understanding on MFRS 116, let's look at one past year's question. Okay. Okay. So before we proceed to the past year's question, now let me just share with you the analysis of past year's final exam question. Now if you look at the schedule here, you find that MFRS 116 PPE is a must question which is being asked every semester. Alright? So this topic is considered very important. So you really need to enhance your understanding in this topic in order to be able to answer this question successfully. Okay, so let's look at one past year's question. On 1st January 2009, Tamar acquired a specialized machinery from Sakura Berhad to cope with the production operation, where the supplier initially quoted total payment of 940,000. So the payment was to be made in 3 installment payment. The first installment was of 50,000 was made upon delivery. The second and third installment payments were 235,000 each. The present value of the deferred payment on 1st January 2010 and on 1st January 2011 were 210,000 and 190,000 respectively. They also incurred delivery and handling charge of 40,000, which they paid immediately, and the estimated useful life was 10 years. And then upon delivery, the machinery underwent rigorous tests to ensure that it fits for intended use, and in doing that test, they incurred 36,000, and the sample produced during the test, they sold it for 14,800. Now the company also incurred repair and maintenance costs of 30,000. And then on 1st January 2012, they experienced some problem with the machinery, and upon inspection, they discovered that a major part of costing 240,000 need to be replaced, and this cost 140,000. On 28 December 2013, Tamar Berhad received an offer from Duke to buy the machinery at 470,000, and this machinery was eventually sold to Duke on 9 January 2014. So the company financial year ends on 31st December every year. So explain. Now this question actually have taken from FAR 460 for June 2014, question 1B. Right? So this question requires us to explain whether the machinery purchased above is an item of property, plant and equipment. So if you can still recall what we have learned in the first part of MFRS 116, we have learned on the definition of property, plant and equipment. And what does it mean by PPE is, it is an intangible asset that has physical substance made of steel and is held for use in the production line to produce entity's product, and is expected to be used by the entity for more than one accounting period. So obviously machinery can be is made of steel, it is used for producing product, and it is used for more than one accounting period. So the answer is yes, the machinery satisfies the definition of PPE. Number 2, explain which of the costs incurred may be part of the cost of the machinery at the initial recognition. So they ask us to identify the total cost of the machinery at the date when we first purchased that machinery. So the cost of the machinery at the initial recognition would consist of purchase price, any directly attributable cost that will bring the asset to the present location and condition for its intended use, and cost of dismantling and restoring at the end of the useful life. Alright, so if you can still recall what we have learned, to determine the purchase price or to determine the cost of the machinery that should be included in the machinery account in our books of accounts, it includes the purchase price and all directly related costs that brings the machinery to the place of location and condition. So in this case, the cost incurred will be part of the cost of the initial recognition, which is 50%, and the present value of the 2 deferred installment payments. Alright, so we call that this asset purchased based on 3 installment payment. So to determine the total cost of the asset, of the machinery, we have to include the 50% initial payment plus the second and third payment of 235,000. But this value is at the value of at the date of the second and third installment payment. So what we need to do is we have to bring it to the present value. Okay. And then the delivery and handling cost as well as costing cost will also be recognized as the cost of the asset because it helps the entity to derive future economic benefits. Furthermore, it increased the value of the asset. Now, repair and maintenance costs were not part of initial costs but subsequent costs, but this will only be accounted as expense in the statement of profit and loss because this is revenue expenditure. So, to determine the initial cost, immediate payment 50%, 470,000, and we take the payment for the first installment and second installment based on present value, that is 210,000 and 190,000, includes the delivery and handling cost 40,000, testing cost is 36,000. We reduce with the sale of the testing product, the sample, okay, of 14,800, okay. So that reduces the cost of the testing product, 36,000 minus 14,800, so you get 21,200. So the total cost of machinery is 931,200, okay. Discuss the possible subsequent measurement of the machinery as an asset. Alright, so as an asset, they can either use the cost model or the revaluation model. Alright, so if you choose the cost model, then the amount of PPE should be carried at cost less total depreciation less total accumulated impairment loss. However, you can also use revaluation model where the PPE but you can only use this model when the fair value can be measured reliably, carried at its revalued amount less any subsequent accumulated depreciation and subsequent accumulated impairment loss. Alright, so however, it is unlikely that the revaluation model is chosen as the subsequent measurement of the asset, as the machine is specialized in nature and the absence of its fair value may result in the company using the cost model. So in other words, for this particular question, it is most likely that Tamar would choose cost model instead of revaluation model, right? Because of the absence of the fair value. Okay. Now, the next question is, explain the possible treatment of the replacement cost. Okay. So, the replacement cost of 140,000 most likely will be recognized as capital expenditure and therefore will be capitalized as it meets the asset recognition criteria and will be added to the carrying amount and written off as an expense if it doesn't meet the asset recognition criteria. Right? In this case, if you look at the question, they have to replace the major part of the machinery which is costing 240,000 and replace with a new one which costs 140,000. So in this case, whether they like it or not, they have to replace the parts in the machinery. So what we need to do is we have to de-recognize the old parts of the machinery and then recognize on the new parts of the machinery. So in either situation above, there will be de-recognition of the carrying amount of the old parts, Alright, so when we calculate the new depreciation, it will be based on the revised amount of the asset. And the last part is describe the accounting treatment of the machinery on 9 January 2014. Okay, so the accounting treatment of the machinery. Now the old parts on 9 January, they received an offer from Duke, right? So eventually they sold the asset at 9 January. So what we need to do is we have to de-recognize the asset. Okay, so to de-recognize the asset, what we need to do is first we will update the information, the carrying amount of the machinery, right? Now the carrying amount of the machinery will be updated on 31st December 2013 to 445,600. Okay, while the difference of 24,400, which is 470,000 minus 445,600, will be recognized as gain on sale in the statement of profit and loss. But how do we determine 445,600? Is first determine the carrying amount as at 31st December 2011, which is 623,840. Alright, so that is 931,200, the total cost of the machinery, minus 931,300 divided by useful life 10 times 3 years. So minus 240,000 minus 240,000 divided by 10 times 3 years plus 140,000. So that gives you an answer of 623,800. Okay. Okay, so that to determine the amount of carrying amount as on 31st December 2013, okay, 2011. So this is how you determine your amount. So this is the cost of the asset. This is the cost of the. This is the depreciation amount for 3 years, right? So 931,200 divided by 10 years, so times 3 years, minus 240,000 is the recognition of the old parts. Okay, so the minus 240 divided by 10 times 3, okay, plus the new parts. Then from 1st January 2012 until 31st December 2013, the carrying amount is 445,600, which is determined by a continuation of the carrying amount 623,840 minus 623,840 divided by 7, which is the remaining useful life, because the useful life is 10 years. We have already taken out 3 years, so the remaining useful life is 7 years. So times 2, right? So your depreciation, your carrying value is 445,600, right? So this is how we're going to account if you are given a question on PPE, right? So what you need to do is to make sure that you determine the cost of the machinery or the cost of the non-current asset that you need to capitalize, all right? And then if let's say there is a deferred payment, then you have to ensure that you bring it to the present value, and then please take into account also the useful life, because you need to determine the amount of depreciation charged on that particular asset. Okay, so we have completed MFRS 116. So what we are going to do now is to recall back the whole of MFRS 116. So this is the overall So what we have learned for the last two sessions, which is the first session and second session, is that we have learned the overall part and the concept of MFRS 116 which is on PPE, right? So it is important for you to understand before we can embark on PPE. It is important for you to understand what does it mean by asset, because PPE is a part of asset. Alright, so once you have understand what does it mean by asset, then you need to know the definition of PPE. And we can recall that PPE is an asset that is used by businesses to generate income and to carry out its operation. Alright, so if you refer to this part, they have mentioned the things that they can do, or what PPE can do or related to, that is, for example, production of goods and services, or rental to others, administrative or maintenance purpose, and to be used for more than one accounting period. So this is what PPE is all about. And PPE can be divided into three, that is property, plant and equipment. And if you can recall back, we have also completed tutorial number 1. Okay, so once you have understand what does it mean by PPE, then you need to know how to recognize PPE. Okay, so there are only two criteria to recognize PPE, that is probable income probable inflow of economic benefit, and then the cost can be measured reliably. Okay, so after understanding what does it mean by PPE, then how to recognize PPE, then you need to understand how to measure your PPE, right? So in terms of measurement, there are two types of measurement: initial measurement and subsequent measurement. Okay, so under initial measurement, you need to know the total cost that you need to include in order to put into your PPE account. Alright, so to determine the total cost incurred, depending whether you have purchased the asset, or you have self-constructed the asset, or you have exchanged the asset, okay, exchange the asset, or you have deferred payment, or also exchange with shares. Alright, so each category have different way of determining the cost of the PPE. So you really need to know how to know and understand the various types of way of getting hold of the asset and recognize that asset, and then how to measure that particular asset. So once you have determined the initial measurement of the asset, then you should understand, in terms of subsequent measurement, every company have the choice to choose either the cost model or the revaluation model. Right? So once you have once you have chosen one model, then you have to stick to that model. But it doesn't mean that you cannot change that model. Right? Let's say, for example, you have used the cost model for 10 years. Then suddenly you decide that because of the circumstances, you need to change it to the fair value model. You can do that, but please include that in the notes to the account to explain why, or what is the need to change what is the reason for you to change that model from cost model to revaluation model, right? But by right, once you have stick to one model, you should stick to that model, all right, as long as you can, until you decided that, okay, until you feel that when using that particular model is no longer relevant to your company. Okay, and also you need to understand What does it mean by depreciation as covered earlier in this session? Alright, why do we need to provide depreciation and how to determine the depreciation? Alright, we know that depreciation is required because we are following the matching concept where we have to charge a portion of the cost of the PPE to the profit and loss account or the statement of profit and loss in order to follow the matching concept and match with the revenue earned upon using that particular asset. Okay, and under depreciation we have three methods. We have the straight line method, reducing balance method, and sum of digit method, which commonly in practice people, the companies would use straight line method and or reducing balance method. Okay, the common method that is used by companies. Okay, and you also need to understand on impairment loss. What does it mean by impairment loss? Although we are going to cover, although impairment loss will be covered in MFRS 136, which is not included, which is not going to be covered in detail in this course. Okay, and then if let's say that you decided to retire one particular one PPE or or dispose the PPE, then you have to de-recognize that particular asset, meaning that you have to take out from that the value of that particular PPE out of your PPE account. Okay, and then if you have subsequent expenditure, then you need to recognize whether that expenditure is capital expenditure in nature or revenue expenditure in nature, because that actually will help you to determine whether that the expenses that you incur, should be included in the PPE account or just recognized in the statement of profit and loss account. Right? So that's all for MFRS 116. I hope you gain some benefits and understanding on this particular topic in the last two sessions. So if you have any, in order to enhance your understanding, just recall back all the tutorials question that I have done with you and also one past year's question. Okay, so in that, Assalamualaikum and a very good morning.